Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Friday, June 26, 2020. What I'll do is a quick update on the market since I've already done one today, pretty comprehensive, and then I'm going to go through there's about 3 dozen stocks that I've flagged within the Nasdaq 100. That's the index that QQQ tracks that stand out to me, and so I'm doing that for twofold. I'm going to go over those stocks. I'll run through the charts pretty quick so we can get it in one video. But most of those, all but really one, stand out as attractive shorts. And so they're both trade ideas. If you're looking for swing trade ideas on individual stocks, or maybe you own some of these because these are within the Nasdaq 100. These are, the very common, popularly traded tech stocks, and the FANGs as well. So I'm going to start out with the broad market, and then I'll roll into those real quick. And then the other part is, if I can make the case and highlight these levels, because a lot haven't triggered sell signals or broken down. They're above trend. Some have, but a lot of these are above trend lines that are close by. And what you can do there is I suggest you can replicate those charts, set price alerts. I have price alerts on a lot of those stocks. And what I've noticed, done this for a long time, there's finally that one day, whether it's tomorrow, next week, 3 months from now, where I get alerts going off like popcorn. I start seeing the market leaders break down, the FANG stocks, a lot of techs, maybe a lot of semis. And it tends to happen at once. And when that happens and you get those breakdowns again on multiple stocks, that's usually a time you want to jump in pretty quick, because as I always say, as you can see here, stocks tend to fall a lot faster than they rise. That's just, I'm just looking at one recent example, and there you had from this point down here to the lows, you dropped in, that was 4.8 days, so less than 5 days, and it wiped out, from that point it wiped out the previous gains over the last 19 days. And that's typical. That's just how things work. So all right, update here. We're back at that 365-ish support on SPY, so we need to break the lows. Not just a little poke down below on one, but both SPY and QQQ. And so we're starting to crack below the lows, and I can turn off those pre-market trades I had on there earlier to show that we bounced. I'll just leave them on for now, it doesn't matter. Anyways, we need to break today's low, which we have now, but not impulsively yet. And remember, SPY might break support, and then if QQQ doesn't, well, QQQ could bounce off support, and that's why I always follow at least these two major indexes. A lot of traders are trading those, and of course this one, although it's not as diversified as the S&P 500, it has a higher weighting on those FANG stocks, and if they don't break, the market doesn't break, at least not substantially. And there we are. We're right at, these are 60-minute candles. See, there's today's low earlier today, low of 240.37, and we're still a little bit above it right now. So you can see that bottom of that candle is just below the 240.53 line. So this is why we're not seeing, the floodgates open or the next leg down, even though SPY's taken out today's low, because QQQ hasn't. So if and when that happens, that's what I would suspect, unless it's a whipsaw. Tough part here is I'm starting the video, it's 3:09, well, just turned 3:10 Eastern time, so 50 minutes to go. And today, Friday, you get position squaring, and it all depends on, are there more people that want to go home long or want to go home short? I suspect because of the technicals we'll get a late day dump, but you could get a stick save even if there's a breakdown. I'm not trying to be wishy-washy. It just would be better if this breakdown was coming at, we got it at, let's say, 11 p.m. on a Tuesday versus, 3:45 on a Friday, because you're going to get that last-minute dump or pump into the close, one of the two. That's usually what you get on the final minutes of trading. So those are levels to watch, and if it doesn't break this week, we watch for that next week. If it doesn't break at all, well, the bulls successfully defended support and the same resistance level that we were, I was highlighting yesterday and earlier today. This 246.81 on QQQ, and SPY 307-ish, 307.13-ish. That's where any rally should, quote unquote, should be capped. Don't want to see us get there, but it wouldn't surprise me, because the trend lately, we had some big sell signals recently, and then we locked into these trading ranges here. And who knows, maybe we grind around here for a while longer. I don't favor it. We already tested and failed there once, and I think that's it. But again, those are the levels to watch. Bullish if we go much above that next week. I doubt it'll happen today, if it does at all. And bearish if we get a solid breakdown below. All right, so that's the markets. Let's not spend any more time there. Let's dive right into the stocks that I've highlighted here within the Qs. And I'm going to start on, we're going to stick mainly to the daily time frame. There's QQQ. There's one trend line I have off the lows right here, which the Qs are flirting with right now, very close to. So again, much more than that. And here's that little support shelf right there that we broke this recent cluster trading. You have that on XLK too. Remember, I went over XLK today as well, and that one's holding that 101.79 level. We're at 101.82 as I do this video right now. So that we really need to see break too. And then of course the FANGs, which we're going to roll into right now. All right, so starting out here with the largest component, the Apple, $1.6 trillion market cap. There's a trend line to watch. Yellow trend line needs to break, and we're still comfortably above it right now. So well, let's just jump to the weekly chart on this one, and you can see right here we have some very powerful divergences. In other words, Apple's at an all-time or just off an all-time high. May put one in this week, and the divergences, even if it continued up for the next week or two, these are big divergences. They are not very common. You're looking at a weekly chart here, and let's just go back and show you, what happened after all previous divergences. This was a divergent high, 39% drop. This was a divergent high right here, but it extended on, and then you got the big drop here. There was a little correction at that initial divergent high. This one right here, divergent high, 32%. Before all said and done, it was a 34% drop. That ended with a divergent low, which is bullish. So there was a resumption of the bull market. Divergent high, 45% drop, 16% drop. You get the picture, 25% drop. Then we go all the way back to last bear market. It doesn't look like much. This was a divergent high. There should be a little DH right here. And it doesn't look like much because the scaling on this chart, I'm using log scaling, but that was about a 55% drop in Apple back then. There was a big one right there. That was probably 30% or more right there, and that was a divergent high and a wedge as well. So, that's it. It's, whereas a strong, pretty decent case could have been made and was made to short Apple back here on this trend line break at the February highs, we didn't have any negative divergence on this a very significant weekly time frame. And divergences on the weekly time frame aren't just for quick swing trades lasting a couple days or two or even a week or two. They are typically trend reversals that can last months or even years in many cases. So that's that. And then it all comes back here. Everything starts, they say every journey begins with the first step. Every breakdown begins with, or every trend reversal begins with a breakdown on a shorter term time frame. So you can watch here on the 60-minute time frame, look for a breakdown of that purple trend line and then that 325.72. All right, I'm not going to spend as much time on all the others. It would take too long. But bottom line is, I've covered these recently. The FANGs. Microsoft has a trend line right here, yellow uptrend line, similar to Apple's. It's comfortably above it right now, and really not a lot of important support down to about 187 because that was this previous high was around that level, not exactly there. Then we failed it, test, boom, breakout, back test, and so this is all right here, a breakout to new all-time highs, and it is bullish and unless and until undone, taken out, meaning unless it fails. So like I said, a lot of work to be done. I'm laying out the case for a correction, short, maybe even a swing trade lasting for a while. Somebody asked today about price targets, and I think where we're at right now, since there's so much price into the charts, like what I just spent talking about on Apple on that weekly chart, and a lot of hot air in this market, there's a potential for a lot of downside. And my preference, I wear different hats. I wear an active trader hat. I covered reverse some index futures this morning, went back short again on a bounce. That's an active trader mode. But then as a swing trader with IRAs, other accounts, those, I don't think it's time to be all in or aggressively short right now, but on those positions, I'm giving them a little room, see what happens next week. If we continue to firm up the bearish case, in other words, break all those support levels I just covered, and see the FANGs start breaking down, then that's the time to add to those positions for what could be a multi-week or even multi-month swing short trade. So a little work to be done, especially on these market leaders and XLK, as I started out early, the tech sector, and even that other trend line run on QQQ. However, we got a check mark here today. It's only one of the fangs, but there it is on Facebook. Remember, we're just taking that 228.70 out, 78 level out earlier. That is comparable to the breakout a lot of these big market leading stocks had recently. They had a high back here in January or February when the market peaked. And then in the case of Facebook, it broke out. There's a big breakout candle, and there was a gap up. It's a big green candle, and there's a big gap below it. And we backtested, tried to rally, backtested again. All the backtests so far were successful except this one. This is a failure. 45 minutes left in the trading day. Can Facebook rally up to close back on, or maybe a hair below or above that trend line? Sure. But maybe not. We'll see. And these are the things I'm watching for. And so, by 358, 359 today, if you see Facebook down here even more, well, that's a pretty solid sell signal, and you may decide to add, or you could short Facebook. You don't have to trade QQQ. I'm doing this analysis in context of the whole market, looking at the leaders and the key sectors. But as I go through here, which I'll continue to do, we're going to see more and more stocks that are at key support levels and could serve to prove to be attractive individual shorting ops. This one's Intel, divergent high, rising wedge breakdown. Here, let me show you what I'm seeing. Sometimes I realize I have so many lines on the charts and the salient levels just pop out to me, but I want to just make that clear. This was a rising wedge pattern. There's your breakdown candle, big red impulsive, everything you want to see on a breakdown, and it's been stair-stepping lower. These are levels I've had on here for quite a while. This one should, quote unquote, should seal the deal. A solid break below 56, kick off the next big leg down to Intel. Intel's been walking up like everything else, a lot of other stocks. Divergent highs lead to these big drops, 34%, 14, 26. That 32 was my call for, and still is, for the next drop once this 42.59 level is taken out. Divergent high, another big drop, even bigger than the 26%, and then even bigger there. I forget what that was, but it was high, obviously a lot higher than that 26% drop, because we went almost to the same level. And all along, we had divergence there. It extended the same divergence. It started at this point. This was a separate divergent high. This one was. The indicators were reset. This is a series of consecutive divergences. And so this, I'm still taking the view that this is the first major leg down, that drop that we had, I should say, into the March lows. And this was the first major counter trend rally and a much larger drop to come in Intel and the semis as a whole. It'd be hard to imagine Intel, drop down here. Let's say that's let's just say even that minimum target that I have, that 38.27, that's 34% drop. Intel's not going to fall 34% without the semis going down and the market going down with it. It's one of the largest holdings. In fact, it's the sixth largest holding. Sometimes I'll refer to the FANGs as FAMGI, F-A-A-M-G-I, because Intel's right up there, at least last time I checked and for a while. All right, next up, NVIDIA. This is a weekly chart. I should get away from these weeklies. To me, they're just, most of them are very similar, quite bearish, big, indicating big major tops, but it can take so long for these to play out. And when they do, they're big moves. I mean, that last drop, it might not look like much when you're looking at a scale that, this goes back about a decade. That was over a 56% drop right there. And we have this divergent high here. But let's get back to the daily chart so you can see what to watch. This is the level right here. This line here forms a rising wedge pattern. You have an uptrend line. Your divergence, really, I'm going to, well, there was RSI divergence. See down here at the bottom? My lines are crazy. And then, so that's that divergence from on the RSI. And then right here you have PPO divergence from this point there. So there's your wedge pattern. And there's your first target right around 315.70. Next up, Adobe. Highlighted this one recently back here. We had a bearish engulfing, didn't pan out. We had a red confirming candle next day, but it stayed above trend, and it continues to stay above trend. So this is a line that I think I have an alert. Probably. Let me add one. If not, can't hurt to have one there just in case. And that's the level that needs to go on Adobe, just like it was back here. Up, 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 uptrend. Seems like it'll never stop. Seems like the stock will never go down. It breaks trend. Just like here, we had a downtrend, boom, breakout, starts the next uptrend. Netflix, they clipped our stop, but I mentioned the other day I still very much like this one. One of the better looking shorts with tremendous potential. Here's the divergence right here. Last time we shorted somewhere after this breakdown because we had positive divergence or negative divergence and a trend line break. And like many things, this rally has just kind of pushed the upper limits of everything. And instead of negating or taking out these divergences, that wasn't the case. All we did, or Netflix did, was manage to extend the divergences, put even in an even larger divergent high in. What does that mean? Well, typically, there's not a hard formula, and it doesn't always work this way, but typically the larger the divergence, the larger the ensuing trend reversal once it comes, whether it's bullish or bearish divergence. So smaller divergent high, smaller correction. And we hit our first target on that before we got stopped out. So technically, it depends what you were targeting. It's a losing trade if you were didn't take any profits at T1. That was on the 60-minute chart. T1 was hit there, and we almost hit T2 and then reversed. So, and then the stop was clipped the other day. But here we go, and we're starting to move back down. So, again, same targets. If you're wondering, if you're new to the site or if you're still in this one, we already hit T1. I wouldn't even cover there. At minimum, I'd be holding out for T2. That wasn't hit yet, and I think we'll come all down here. I'd probably give you a T3 zone if I decide to make this an official trade. It's more a matter of having the time to mark all these charts up and do the follow-ups. I've been very remiss and neglect in updating all the official trade ideas, moving them out of into the completed trade categories. I cover them all in these videos, to give updates there, but on the site I've just been really behind on that with a lot going on in the last few months. All right, Netflix, that's my thoughts there. PayPal, beautiful wedge. Look at the divergence right here. That's you want to see a bearish rising wedge pattern confirmed with negative divergence. This is a very steep and long in the tooth trend line right there. Break of that, first target and a bare minimum target, 159.14. Again, no sell signal. That needs to take out the trend line, and it could continue to walk up that trend line. That's about 8.5% drop. First target, second target's 12.5%, and then third, and that's a great target to cover because there's a big old gap below there, about 19% if and when it gets there, and that would be my preferred target there. Cisco, just pointing out Cisco. It's not one of my favorites, but it broke trend already. Had a big red bearish candle there. It's kind of bouncing on support. I'm just highlighting that because that's a big one in the Nasdaq 100. And like many, it's in a downtrend. It's not one of the fangs, so it's not at all-time highs. It's been stair-stepping lower, a series of lower highs, 1, 2, 3. And lower lows so far. If it reverses here and takes out this low, then that downtrend's intact. So many stocks, are exhibiting behavior that, it's very typical that they're in a bear market. We just have this dichotomy right now between just really a handful. It's not just the fangs, but it's largely the fangs and tech, some tech stocks, some semis that have made it to new highs recently, while the majority of other stocks, and I talk about this often, this is market breadth deterioration. The internals deteriorating. More and more stocks, especially when you get away from those mega cap beloved names, are in their own bear markets doing their own thing. JD.com, that is a big Chinese online retailer, I guess like Amazon or Baidu, which I'll get to in a second here. Negative divergence, not my favorite, but there is divergence there, small divergence there. And if you're looking for a target on this one, if you were to short it, this trend line, when you see a well-defined trend line like this, farther a stock gets away from it, they usually move up, and these not, I'm going to say predictable, but a pattern like this, you come down, you visit the trend line, you bounce, you visit again, and when you get too far away from the trend line like this, there's usually a mean reversion. You get a big correction, come on back down to the trend line. So just trying to let you know that would be a swing target to have JD come back, and even then it would keep it in a bull trend. It might be a 35% drop if it happened over the next 1.3 months. That's where I'm holding the crosshairs. But at 35% drop, you could call it a bear market if you want, but basically all it would be is a correction and a bull trend right here, because the stock bottom in late 2018. So and that's why short a stock in a bull market or bull trend all day long, to get 35%. Costco, an official trade, and that one's based off the weekly chart. And we're just, what I've been saying for a while since we entered this trade is it needs to take out this trend line. Let me color it up for you. I'm not going to spend too much time on it. We're starting to crack it, but not with conviction. This purple trend line. That's what Costco needs to break, and to open the door to move down to this first target right here, 282. We're still profitable on that one. We entered that at 301.55, and if it can move a little bit lower, take out this 40-week moving average, maybe last week's low, that should open the door for a move down to that first target. And even from here, we're already up on this one, it's still another 5% drop. And again, with this one, we have some long-term targets. That's a longer-term short trade, intended to be a longer-term trade. AVGO, that's Broadcom. I have a lot of lines here. It's a busy chart, but what I'd point out here is this one's been struggling around this 322-ish level. So a potential triple top. 1, 2, I'll just count that as one tag. It's in a cluster. 3, if it fails there, you could probably put a trend line to watch if it breaks. Not one of my favorite, but it's a simple strategy. If the market rolls over, then you can short this one here, or you can short it now, even before the market rolls over, or wait till you get some more sell signals in the market. And then it's a TA 101, says short at resistance, and this is resistance, with a stop somewhat above to allow for a little false whipsaw, failed breakout. And if you're bullish, then this one's building energy, and maybe it pops up through there. It's a bit overbought, I think, to just take off and run, but a bull would want to see these recent highs get taken out, and maybe Broadcom has a lot more to go. Thing is, I look at the weekly chart, and I think that's what a lot of traders fail to do, even if they use technical analysis. I think they're a little short-sighted sometimes on a certain, like a daily time frame or 60-minute chart. I take a look at the bigger picture. And the thing is, these take a long time to play out. There was a divergent high back there in 2015, and Broadcom dropped in a matter of months 33%. There was a divergent high from that point. I'm just measuring the drop. I'm moving to the left, but capturing that high. Dropped 30%. Divergent high there, and divergent high here. The last drop was from the highs. Divergent high was about 52%. And this is a nice clean back test of the primary uptrend line right there, and not yet another extension of the divergent high because we haven't taken out the previous highs, but if it continues the back test, it will be. You'll see we'll have the divergence, and at no point anytime soon is this stock going to take out these divergences. Maybe months down the road, if this is some great super bull market and it's got, the stock just keeps going up, we burn through these divergences. But as of now and anytime soon, these divergences will remain intact, and they're big. They're a lot bigger than these divergent highs back here that led to that 32% drop. Okay, let's move a little faster. We got a lot more to cover. Texas Instruments, not one of my favorites. Not even sure if I meant to flag that. Maybe a double top high there around 135. T-Mobile, TMUS, wedge type pattern, divergences right there. You need to break this trend line. That would be a sell signal. Really, I don't see a whole lot of support. I would just swing this one down. Set your stops appropriately, maybe lower them if it starts to play out as you go, trail them down, but that one's poised for about a 19% drop if these divergences play out for and we get a sell signal soon. And you're going to need the market to drop to, I doubt T-Mobile, it could, but I doubt it's going to drop 20% if the market continues to rise. Qualcomm put in a big divergent high here, already had a correction, and again, it's a matter is this just a counter trend rally, pretty strong one. Sometimes you rally back all the way to just below, sometimes even just a marginal new high above after a big sell signal. And if we did it anytime soon, you'll see we'll have even bigger divergence. So that's the story on this one, and there's a trend line to watch right there if it breaks for a sell signal. Starbucks, mentioned Starbucks recently. If I'm not mistaken, this might be an active trade. Let's see, what board would I have that on? I thought I mentioned Starbucks. Yeah, okay, these are targets back here, or was that from the last trade? I I've covered these stocks so many times, and I cover them regularly. These components in the Nasdaq 100, I can't recall, but there was a rising wedge. I think of what it was is a few weeks back I pointed out here's an objective short on the run into that 81, 82-ish resistance right there, and then again on the trend line break, and you can see right there was our sell signal, that breakdown candle, that red one, and it's been stair stepping lower. It's now at that 71.22 support / target. Normally I might say a reaction here, but I'm looking at the market poised to break down if we go down much further, and that's probably going to take Starbucks down on through there. And here's another stock that, make no mistake about it, this is a very popularly traded stock that's in a bear market. Has been since the middle of 2019. Stair stepping lower, a series of lower highs and lower lows. High, 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 another high right there, another high right there, and now it's got a way to go before it makes a new low, takes out that previous low, but if it does, it's going to be a pretty ugly ugly drop. VRTX divergence, you can see previous divergences. You look at these divergent highs, divergent high, and another. This is really just an extension of that previous divergence right here. That was a divergence. That was a triangle pattern. That was a divergent high right there. And this was a breakout of the downtrend line right there. And that was the catalyst for this whole rally. ISRG, not sure if I meant to oh yeah, I did want to cover this one. Here's a stock that's all the way back to 2018, had a breakout right here, but it's about this 581-ish level, not super well defined, but we had a double top there. It finally broke it out, but that breakout proved to be a false breakout, aka bull trap. And as I often say, fewer things in trading are more bearish than a failed breakout. So once that breakout to new highs failed, it was just a waterfall sell-off, and we've come all the way back there. So watch, rinse, repeat. Can't promise you we're going to fail here again, but play the odds. What happened the last 4 times we got up to this level? Well, you had big drops, and the stock turned out to be a nice short trade. So that's ISRG, Intuitive Surgical, ATVI, one of the gaming stocks, Activision Blizzard, little trend line break, back test, and a drop there. Beautiful little, clean little wedge, not super well defined trend line, but I like the divergence here. Sharp negative divergence, just like we had here, divergent high, and that divergent high was good for a drop of 21%. Big rally since then. I think the market figured, okay, everyone's going to stay home and game. You got your people that are gamers, and so yeah, maybe that benefited the company, but how much of that is priced in? So the way I look at it now, one of two things happen: either the economy gets back on track, and then these gamers, kids, whoever, I'm sure adults game too. They're going to go back to work. You can't sit home and game forever. You're going to get a job, or the economy takes a dump, and then they can't afford to buy these games or pay for the services. I don't know if Activision Blizzard has a subscription service like Microsoft Xbox, but the gaming stocks look ripe for a pullback to me. And there's your targets right now. Let's just say maybe this one down here, 57.18, certainly at least a 68.12 level. That would be my first target, and that's about 11% right there if that one's hit. And if that gets hit, I'd expect a reaction, but I think we'll go down here. So I would say this is right now my preferred target, about 63.70. Again, pending a sell signal, which we do not have. This one's still above trend, but that's about a 17% drop. AMAT, Applied Materials. This is a big ship equipment maker. Canary in the coal mine for the semis. We broke down there. Sell signal, big drop. Bearish rising wedge pattern. Little divergence right here at this most recent high from here to here. And a little whipsaw there, but we were down below trend again. First target here, and I've had this blue line for a while because I think that level will open the door to a bigger drop if we get there. And even if we just pull back to that level, which would be my minimum target, you're talking about 10% drop in AMAT. ILMN, Lumina, just looks like a stock that has a problem when it gets up to the 380-ish level right there. That's it. Big, possibly a very big triple top, especially when you look back and you see something like that on the daily. You can look at the weekly chart, and it looks like a broadening wedge pattern here. And but this line, I can tell you, is each of those highs were higher. This is big negative divergence. The last time we had negative divergence like this on the weekly chart was all the way back here in 2015, and from there the stock dropped, before all said and done, about 50%, got chopped in half, and that correction or bear market, whatever you want to call it, lasted for about a year and a half. So I see no reason to, that couldn't happen again, especially based on, the way these charts look here. And Autodesk, this one was a trade back here. Actually, I don't know when we traded that, whether that one was stopped out or it was shorted here. These targets are always usually out on the margin here, but you can see here, wash, rinse, repeat stuff. We had a divergent high back here, drop of I don't know, 27-30%, divergent high there, drop of about 27%, divergent high right there, drop of about 39%, and I could just put the little DH right here. There's your negative divergence, divergent high, and all we need now is a sell signal. Remember, divergence is not a sell signal, merely an indication that a trend reversal is likely. There was our sell signal, the breakdown candle. Here we did a breakdown, a back test. Here was a breakdown there, and said that's all we need there. Throw in a breakdown, and I'll have to study this for targets, but maybe all the way back down here to 175.24, possibly more. We'll see. MELI, rising wedge, negative divergence, same as you had back here. ADI, uptrend line right there. Seems to have a problem with this 127.84-ish level, so 2 failures there recently. Not one of my favorites, I'm going to point that out, but one to watch because that's a semi. WDAY, Workday Inc. Nice little wedge type pattern with negative divergence here. Let's see your divergences right there, just like you had a little wedge with divergences right here, and then boom, that. And now you have something similar there, and a trend line in which to give you an objective short entry. And again, as far as targets, if I don't list targets, for the time being, since there's a lot priced into these charts, the potential for, drops well into the double digits on many of these stocks, most of them in fact, 20-30% or more. I would just like I said, if you take any of these, if you get the sell signals, set your appropriate stops and then just trail it down. Use the old let your winners run, cut your losers kind of rule. EA Electronic Arts, another gaming company, and there's your negative divergence. Like I said, the gaming stocks look ripe for a correction. That's one of the sectors that stood out to me as I went through here in the Nasdaq 100. About a 13% drop from where we're at now. Sell signal pending a break of this trend line. That's not super well defined. You might also look for any type of bearish reversal pattern. Or I can say this: if you get a solid sell signal, if the FANGs break down and the Nasdaq breaks down, I don't want to say you don't need a sell signal on these, but I could tell you I'd have enough confidence with this pattern to short this one before a breakdown if I had some solid sell signals on the Nasdaq and S&P and the FANG stocks and the tech sector as a whole. Here's one that's rallied into resistance as well at that wedge, and you could almost take a shot here in anticipation of a breakdown with a stop somewhat above too if you're an aggressive trader. Lululemon, not one of my favorite, but looks a little stretched, and probably a break of this trend line should do the trick. This uptrend line right here, we already broke this uptrend line, and I think a break of this one will do the trick for Lululemon. MNST, Monster Beverage, again, not one of my favorites, just one that looks a little toppy to me, so I'm going to move on from there. SGEN, Seattle Generic, biotech stock. Big divergence in place on this one. So last time we had a divergent high was here, before that was right here. We had this, and then before all said and done that, this divergent high, and now we have one right here. So I would say target-wise, and be careful on biotechs. I'll throw a little caveat out there. They're kind of unique as far as risk goes. I don't know this company. I don't know what they have, if they're big. Well, they must be pretty big. They're in the Nasdaq 100. But your smaller biotechs, especially, you have You can have a drug in clinical trials that the company has everything or a lot riding on, and then out of the blue you get some negative results. Maybe people getting sick, worse, dying. They pull the plug on the drug, and again, those can come out of the blue. Most other companies, like let's say Intel, Apple, you can manage your position pretty well around earnings. Every 3 months, you know when earnings are going to be. So if you don't want to get caught in an earnings surprise, you can step away, step out of it, or hedge up. But again, these guys, a lot of times when you have clinical negative or even positive clinical trials, if you're short, let's say you short this one, it's going down. All of a sudden, they announce some incredible results on a drug, much better than they thought. The stock could explode to the upside. And again, that comes out of the blue. Sometimes that's released either before or after the market, or sometimes during trading, and those stocks just explode. So just a little caveat there. Don't put too much into biotechs, or at the very least, do your own due diligence. Put a little research on the company. What do they have? What are they working on? What kind of biotech company are they? Next one up is IDXX, negative divergence right here. Simple watch, rinse, repeat kind of thing. At minimum, I'd be looking for another. We already back tested this level once. There was a breakout here above about that 295 level. It was a big resistance level. Look at that. 1, 2, 3, 4, 5, 6 attempts. Finally broke out, back tested. So in that, it's good from that point of view. It's a breakout to new all-time highs that cleared out a big resistance level. Although we have negative divergence, it tells me we may come back and check that level one more time. And if we break it, that's a more powerful sell signal. That would be a false breakout, and that would open the door, probably come all the way back down here at about 215 on IDEX. CDNS, Cadence Design, a little divergent high right here. Need a break of the trend line to trigger a sell signal. Last time we had a divergent high was right there. Before all is said and done, well, the initial drop was about 17% there. CSGP, CoStar Group, Real Estate Services. I have a clean uptrend line, a bearish engulfing candle right here the other day, and divergence really, it's about an equal high, almost flat line divergence, about equal high in price right there. That was a blow off top, little exhaustion buying climax candle there. Follow that big correction came, and now that bearish engulfing. So a little more downside. Break of this trend line should do the trick, and quite possibly bring this one all the way back down here at about 504, and that would be roughly about a 28% drop. INCY, Insight Corp, big megaphone pattern, aka broadening wedge pattern, and also divergent high. So you can see here the top of the megaphone pattern is your divergence line as well. Big negative divergence right there on the indicators, just like you had big positive divergence here at the lows right there at that low, and that was the technical catalyst for this rally that we've had since then. So has it run its course? Probably. Here was a divergent low there, catalyst for rally, divergent high, catalyst for correction, and so that's where we're at. SWKS, Skyworks, cracking below the trend line, nothing impulsive yet. We don't have divergence. It's not necessary, but it often accompanies highs. So just keep an eye on this one. If it wants to push up, maybe back test this trend line at a higher level, something like this. That would come in, give us a divergent high right here. If it did so soon, it would give you this on the indicators. That divergence would be extended, and so then you might look to short on a back test if it gets there. Other than that, maybe a break of the recent lows. If it's not going to go on and put in a divergent high, that would also be a failure of this breakout over the previous highs right there, and that one, bring that one down. ALGN, Align Tech, trend line break. It's been back testing for a while and then ended up failing at this 289 resistance level. You can see that's been resistance for a while. Not one of my favorites. I'm going to move on. Just had it flagged. NTAP, NetApp. What stands out to me is here's a stock, like many, that's in a clear downtrend, a bear market. This is what a bear market looks like. It's like a bull market in reverse. You have stocks stair-stepping lower, and you get these bear market rallies, and they're powerful and they're convincing. But then you take the next leg down, and you can see in this one, it's just been a series of these uptrend lines and these bear market rallies. Break, back test, and the next leg down. So here it is. So again, you can see this was our primary end of the bull market run right here. Break of this trend line, first leg down, break of the next trend line, next leg down, break, back test, next leg down, break, back test, so forth and so on. Baidu is last one in the list, and it actually it's the best looking one that I can find right now in the Nasdaq 100. Big divergent low. We had a divergent low here, and I believe I pointed that out back at the time last year, and it was the catalyst for this big rally in Baidu right there off the lows. That divergent low produced a rally of about 60%, and we have an even bigger divergent low. Hard to see this one going up, because if the U.S. markets fall, Chinese markets fall, everything tends to be tied together now for the most part. But I just wanted to point it out that it has that big divergent low. I don't see a clear. I can't make a strong case, for a buy signal on this. The trend line is a few hits there. Maybe we do something like this. If we're going off the thesis that we're in a bear market, this stock certainly is. Don't have any, don't be mistaken about that. We had the bull market high right here in this stock, and it's been stair-stepping lower since. So we could reverse here, go on and continue and put in a divergent low at lower levels, and maybe set the stage for the next bear market rally later on. I just wanted to share that one. It looks different from a lot of the others because it's well off its all-time highs there. All right, we're going to wrap it up here, and like I said, these are either individual trading ops, or when you see these, especially the ones I went through and ordered sending market cap. So the ones in the beginning of the video had the highest market cap. Those were your $1 trillion club, that elite $1 trillion club with only about 3 or 4 in there. And then we went down to the high, 800, 900 billion, and I ended with Baidu, which is only a $4.2 billion company. Still a large cap company, but it's again not nearly as big as the other ones there. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.